Hello and welcome to Boom and Crash Expert Advisor. You're welcome to The Dollar is Awake. As it stands, I just woke up after the dollar gave me a nudge on the shoulder this dawn, giving me a hint it's awake. You're welcome. Once you join the stream, you can drop a hi so I know you're watching. I'll also give you a shout out. Let's check the market and see where it will be heading. Let's see if we can do some predictions. And of course have them right. Okay. Like I said, you can drop a hi so I know you are in, and then we start. The market you are looking at right now is Crash 1000 index. And if you have any observations or have any questions, you can also drop it in the comment box of the stream. Let's take a look at Crash 1000. Let's start with Crash 1000 and I'll quickly do an analysis. Now, if I'm to judge from what I'm seeing, okay, if I'm to give an outright judgment, I'm going to say Crash 1000 is going to trend upward by tomorrow from its current price. That's an outright judgment. But let's go back. I think I did some analysis some few days ago. Was it 2 days ago? Yeah, I think it was second March, somewhere here. Yes, somewhere here, and I predicted it was going to go. It's going to hit 11875. Yes, but it hit it in 2 days. The very first day, it almost hit it. It went back a little bit and then moved up and touched our TP. But I closed before that TP because I saw that it was going to go down. So now the day is beginning, and these are vertical dotted line, which shows that the day just began at this point. So in other words, we are beginning the day from a downtrend. Let me switch to M30 and show you why I'm predicting it's going to go up. Now this is why I'm predicting it's going to go up. From the current price, this is why I'm predicting it's going to go up. First of all, let me go back. Now, you see, Boom and Crash is a market that really is one of the most respectful markets when it comes to trading, because it runs on computer algorithm. It runs with random number generation system. Okay, now when I take my horizontal line, I put it here, you realize that there's a massive support here. From here, this point, let me place my text here. Let me call this A, capital A. I'll bring it here, A, right? And I'll bring my second point, which is a B, here. Okay, now the reason why I'm placing B here, let me bring it up so you can see it. The reason I'm bringing it here is now you notice something. I see Javier. Yeah, welcome. I hope I pronounced your name right. Now, we've established the fact that A and B, these 2 points form a strong support point or strong support zone. So what we are going to do is zoom in into B, okay, and then we see this from here. Oh, sorry about that. Let me delete this. From here, you see a downtrend up onto this point. Now, the reason why I'm predicting it's going to go up is because you see this side goes down, retraces, goes down, retraces, comes down, and instead of going up to follow that kind of pattern, that kind of zigzag pattern, we see that it rests. The market relaxes. Instead of going up again from here. Instead of going up, it relaxes here. So this zone, this particular area, is a consolidation zone. This is telling us that this whole pattern is about to break. This whole pattern is changing, and so it relaxes here. It's like it's flat over here. It keeps going up and down over here. So what is going to happen? It's going to go up. You say, okay, how do you know it's going to go up? It's going to go up because if it were to go down after this long momentum, you remember I spoke to you about the loss of momentum, always checking that the market is losing momentum. When you check this, when you check this long candle, this long red candle, you realize that we couldn't have continuous red candles to show a loss in momentum. We just saw this big candle, this H1, we saw this big candle, and then we saw a green one, then we saw red, then we saw green. So there is a conflict at this area. So because of this, we can be sure that that downward speed that the market was moving with has broken, and so the next thing is that it's going to move up. So from here we can even buy this H1. Even if there's a spike, we are not so bothered, because we believe that from here the market is going to go up. So I can drag my TP somewhere here, okay. So the momentum with which market was moving downward has broken by the consolidation zone we have seen for about, I think, 1 2 3 4 5 6 7, for about 7 hours. We see that the market has consolidated. So there's a high possibility that it's going to go up above this current market price by tomorrow. So let me push this here. We should be looking at something like this, an angle like this tomorrow. So I've placed my TP at 11707. Let's check M30 to confirm what I'm saying. Now when you look at M30, there's a similar pattern. You see that there's a similar consolidation pattern over here. Let's check M15. There's a similar consolidation. So even though M15 goes up and down, you realize that its angle has changed as compared to the angle we had from here to this point. So although this side there was a steeper slope, at this point the slope, there's how do you call it, the angle has changed. The angle of the slope has changed, which shows us that it's going to go up. So even when you look here, you see there's something called an M formation. There's an up down, so there is a high possibility that it's going to go up again, okay, because the M formation has appeared. 1 2 3 4. So there's a high possibility that this side is going to shoot upward. That's why I'm confident that from here in tomorrow I'm going to hit my TP. Aside that, one thing that makes me more confident that I'm going to hit my TP is that when you look at the past data, Okay, we have been trending from here until here. Okay, so there is more room for the market to move upward. Do you get me? There's more room for the market to move upward. So let's look at H4. What do you see? There's more room for the market to have its price moving within this area. Let's check boom 1000. Let's see what's happening. Now this was a very good place to come in to sell. This area was a very good place to come in to sell. This M30, and you realize that this is a long series of spikes. Okay, and then you see that the spikes have calmed down, and when you see spikes calm down after a long series of spikes, that's a good time to trade along the trend. I repeat, when you see after a long series of spikes, when you see that after a long series of spikes the spikes have calmed down, that is the best time to enter to trade along the trend. So if you have low balance, if you are someone with low equity, $20, $30, $40, I thought in how to trade with a low account balance, you would have to come in. Don't just enter the market, wait for a long series of spike and be sure that they have calmed down, then you enter. I'm referring to low account balance people, because you see, if you have good enough equity or you have big equity and you come here and let's say you sell here, if you sell here and you have big equity, you are safe, because the market is going to come down, it's going to retrace again, and you'll be in profit. But if you are not sure whether the spikes have calmed down and your equity is small, you blow your account. That is what happens with a lot of people. They feel like, oh, let me just enter and pick two candles, two candles. You'll be in danger. You get the point? So wait and be sure that the spikes have calmed down, and then you enter. So always be spotting for the calming down of spikes. Always be spotting points where spikes have calmed down, and you'll be good to enter. Let's see M15. Let's see whether we can predict something for boom 1000 for tomorrow. Let's see. M30. This looks like it's going to go up for a while and then come down, because generally we have an uptrend. Take a look at this side, this portion here. Realize that we have an uptrend, so it's possible that it's going to go up before coming down. Oh, it seems we are really riding on the crash 1000. I hope a spike doesn't happen soon, because this market is definitely going to buy, even if it should spike now. Okay, so there's a possible upward movement, and then let me see M5. This is a little bit dicey, quite tricky. The market hasn't clearly formed for me to be confident with where it's gonna move. But I think it's gonna go up for a while, then it will come down again from here. It's not so clear. The reversal is not so clear. So it could spike anytime now. All right, so let's take a look at boom 500. That's what I do when I'm not sure. And I think I talked about this. I talked about this in my previous live stream. But what happened was that because the network was bad, you couldn't hear that part of the stream. What I said 2 days ago that unfortunately couldn't appear in the stream was that boom 500 will start spiking a lot, because if you look at H4, we are coming from a very, very, very high steep. So from here there's going to be a high spiking season in the coming days. There's now been a spike on crash 1000, but it's still a little spike. There's going to be a high. That's what I said. And what I said it 2 days ago. Let me zoom in and show you why I said it. I said it okay, so the day began here. I said it here when the day began here. This is why I said it. There's going to be a lot of spikes, and eventually there was. So boom 500 is going to spike a lot. So if you sell on boom 500, you should be selling at high points. You should be selling above. Now let me show you. If you are going to sell on boom 500, you should be sell above halfway of your chart. This top side is 50%, the bottom is 50%. You should sell when price is above 50% of the screen. If you sell around this area, you are safe. And if you sell above 75%, do you see that it's just spiked? If you sell above 75%, you are safe, because if the market retraces, you are likely to get back into profit. Don't sell in the coming days. Don't sell here around this zone below 50% of your screen. Okay, you can be in danger. No, imagine you sold here. Just imagine you sold here. Just imagine you sold here. It means that from here up to the current price, for for so many hours, you will not be in profit. You'll still be in a loss. You'll be in a floating loss for long. Did you see that? So that's my general analysis on boom 500. Let's take a look at crash 500. Taking a look at crash 500. Let me see. Let's go to M15. Okay, now this has a lot of room to spike. There's a lot of room for this market to take a look. From here to this point, we have an upward trend. Then we have consolidation here. From this zone to this zone, we have consolidation. So we should expect that the market will come down. Do you see that? Point A, point B, then consolidation, then downward movement. Do you see? And downward movement. So we should expect crash 500 to be crashing. Let me go to M1 and see what's happening. There's a consolidation here. Now sometimes when there's a consolidation, it's a little bit unpredictable to tell where the market is going to go until it first breaks either a support or a resistance. Then you know where it's going to head. So from here is a little bit difficult because we have an upward movement being balanced by a downward movement. then another upward movement being balanced by a downward movement, then a consolidation. So this is very tricky. This is very, very tricky. Do you see that? So for crash 500, I'm not going to take a trade, but at least for crash 1000, I know we are going to go up. So far, I'm predicting on crash 1000 and boom 1000. The market hasn't formed so clearly, even though I feel it's going to go up, but I don't want to conclude on that, and I don't want to bet on that. Boom 500, I told you will be spiking in the coming days. What did I tell you? There's another long spike again. It's another long spike again. So for boom 500, we're going to be spiking at least for a while, maybe 3 to 5 days. For crash 500, the market is not so clear, but in the long run, I would go for a sell on crash 500. So let me go for a sell on crash 500 for future sake, because each M15, M30, H1 is all telling me that the market is going to come down in the future. So if I have good enough equity, I can go for 0.2 or 0.25 lot size, set my TP a little bit down here, and then relax. But if I have small equity, I'm going to set a sell limit at this point. Which means that sell limit at this point means that, let me delete this one and decrease the font size here, set it to 12. I'll set a sell limit here, which simply means that if the market hits this area, it will place a sell. If it hits this my sell limit, it will place a sell. Then I'll be expecting the market to move downward. So I've concluded on two markets: crash 500, crash 1000, the crashes. But for the booms, boom 500 will be spiking a lot. And if you are going to sell on boom 500, make sure you are selling above 50% of your screen, above the 50% mark of your screen, or the 75%. To be sure, sell when you are above 75%, so that when the market retraces, you can capture your profit. Please, if you have any questions, let me know. So in the long run, crash 500 is going to crash. Crash 1000 is going to trend for a while into tomorrow. I mean into the afternoon. Yeah, because it's 12:53 over here. All right, so that's it for today's market analysis. I won't spend so much time. Yes, Adnan Global Access Forest. You missed the TP for crash 1000. Oh, okay. All right. You're welcome, my friend. So the TP was set to 11. Let me use my crosshair tool. 11706. 11706. Okay, so we were how do you call it? We were cruising on the trend until we were encountered by a spike. So we are still in it. So this should take about, if there's little interruption from spikes, this should take about 2 hours, 2 to 3 hours to hit TP. And that's the disadvantage of trading a trend. It takes a long time to have a substantial movement. All right. So you can revisit the video and then check the analysis, and I'm sure as you always watch, as you always tune in, you'd understand the psychology of the market. You understand how the market moves, and sometimes it gets to a point where you begin to trade with instincts. You start with analysis and it gets to a point you trade with instincts because the patterns become regular and they become noticeable. So it's easier for you to enter and trade, sometimes even without much analysis, because you keep seeing a repeated pattern. Yeah, so that's about it. Without much delay, we would end the stream here. You can always revisit and learn. All right, thank you very much. It's been Daniel here, Boom and Crash expert advisor. Enjoy the rest of your day. Bye.